Hello and welcome back to another video. Today we're going to be looking at government bonds, also known as treasury securities, and I'm going to be explaining them in detail so that you understand exactly what they are, the different types that are offered, as well as all the benefits and disadvantages that come with it. So make sure you watch this video all the way to the end so you don't miss any important details. So to start with, what are they? United States government bonds, also known as treasury securities, are debt securities issued by the US Treasury Department to finance the government's operations and expenses. These bonds are considered safe investments because they are backed by the full faith and credit of the United States government. So what different securities do they offer? To start with, there's treasury bills. These are short-term securities that mature in 1 year or less from their issue date. Then you have treasury notes. These are issued with maturities of 2, 3, 5, 7 and 10 years and earn a fixed rate of interest every 6 months. Next you have treasury bonds. And these are long-term securities with a 20 or 30 year original term to maturity. And finally, we have treasury inflation protected securities, also known as TIPS. These are securities where the principal is tied to the consumer price index, also known as CPI. With inflation, which is a rise in the index, the principal increases. With deflation, which is a drop in the index, the principal decreases. The US Treasury also issues non-marketable treasury securities, including savings bonds, and special securities for state and local governments. The income derived from these treasury securities is treated as interest income for federal income tax purposes. So what are the benefits? To start with, guaranteed income. They provide an almost guaranteed source of income and hold their value in just about every economic environment. This makes them incredibly attractive during periods of economic uncertainty for both large and small investors. There's also safety and preservation of savings. A portfolio that includes treasury bonds, bills or notes provides safety and helps to preserve savings since treasuries are considered risk-free investments. There's also consistent interest payments. With their consistent interest payments, treasury bonds can offer an ideal income stream after the employment paycheck ceases, making them a good investment for retirement. There's also a wide range of maturity dates. Treasuries are available with a wide range of maturity dates, and this allows an investor to structure a portfolio to specific time horizons. And finally, they're low risk. Because many consider them the safest investment available, they don't really come with much risk. So what about some of the disadvantages? While they are generally considered safe and reliable investments, they do have a few disadvantages. To start with, a lower rate of return. The interest income earned from a treasury bond can result in lower rate of return versus other investments, such as equities that pay dividends. There's also inflation risk. Treasury bonds are exposed to inflation risk. The fixed interest payments of a bond could be worth less in real terms. There's also interest rate risk. Just as prices can rise in an economy, so can interest rates. If interest rates rise, the price of existing bonds drops because new bonds are issued at a higher interest rate. Also, you'll realise losses. If you sell a bond before it matures, and if interest rates have risen since you purchased the bond, you could realise a loss. And finally, there's lower yields. Because they are seen as one of the lowest risk bonds in the market, their yields tend to be relatively low. So this has been my video fully explaining government bonds. Hopefully now that you've watched this video, you understand everything you need to know about them, and this should assist you when you're looking to invest. I also hope you found this video helpful, and if you did, please comment down below to say it helped you out, and like and subscribe for more content like this. Thanks for watching.